Morning, everybody. Tim Knight. It's very odd for me to do a video in the morning, but I felt this would be a lot easier way to get across some thoughts I had. As I'm standing here now, we're about 40 minutes into the trading day as I'm beginning to record this. Everything's green. And so, as has been the case all week long, it seemed the night before that, oh boy, the bears are going to get a chance, and every single day they've been shut out. This week has been a complete bear death. Intel and KLA got blown up last night, and the market opened up red, and it's been doing nothing but going up. And I wanted to mention a couple things in passing. First of all, as I'm looking at the ES, and I know it's not on your screen right now, just hear my words, then we'll get to Tesla. As I'm looking at the ES, the Fibonacci levels that are germane are twofold. One of them is around 3,800, which is of course what we beat on again and again and again through December, and it refused to go lower, and then it started this ascent. I didn't think we'd have to face this, but the next germane fib is up at 4186, and we're most of the way there. That is the same level that was reached at its prior brief peak. When was that? That was on December 13. Why should I even have to look that up? December 13, it spiked to that level and then did a very quick retreat. So miserable as this rise is, that's a pretty logical, powerful exhaustion point. And so I'm just kind of like rolling my eyes and leaning back against the wall and letting this thing burn out. In the meantime, I really got to talk about Tesla again, because I think it is incredibly important to the psyche of this market as a whole. Now, as you well know, I've beaten the Fibonacci's to death on this one. But something dawned on me this morning that I wanted to share with you. The Fibonacci's I've been all hung up about have been the lifetime Fibonacci's, ranging from their IPO 13 years ago all the way up to their lifetime high. And those have done just a breathtaking job with respect to support and resistance, or just kind of magnetic powers, if you will. So you can see here and here, even in retrospect, before the lifetime high even existed, obviously, but you can see time and again how meaningful these lines are. There's the lifetime high up there. And so, we fall and fall and fall, find support at that level, rise to the next level, support at the next level. It's just amazing to me. It's like trapped within these two escapes. Where does it stop? It stops at the next level. And again. And then as it stair steps down, we go from this level to this one, up, then to this one, and up, and then all the way down to what had been my target that I've mentioned 1,000 times of just under 100, which we almost got to, but not quite. And then we've rallied mightily up to this level. Now, we're above that now. We're at 164. And so that opens up the prospect of a trip to around about 200 or so. But there's another Fibonacci retracement that I think is relevant, which is this one. And I'm kind of surprised myself that it only dawned on me now to bother drawing this. But this one's also anchored to the lifetime high, but the low is anchored to the COVID crash low. And it's pretty interesting what we find here. So just to be clear, the super long-term one I've put in gray, and this shorter term one is in red. In fact, just not to confuse the issue, let me make that not green anymore, because that should be sufficient. Let me see if it works. Yeah, that's fine. Okay, so now we've got two Fibonacci's, and I love my clean chart, so I'm a little embarrassed to show you something so messy, but in this case the messiness is necessary. So keep your eye on the red lines is what I'm saying. And my point here is that as we're ascending, we actually, the red line here has a very interesting relationship too. You can see how powerful that was with respect to the support, and then up we go. But look what's happening here. This level at 172, which is only about $7 away from present price levels. This is the next looming resistance point. So I've been kind of scratching my head at like, how on earth could Tesla manage to get back to over 200? Maybe it won't. Maybe it will, but maybe it won't. If it doesn't, we need a sensible, non-arbitrary place to suppose that it might run out of steam. And I'd like to propose to you that it's right here, 172.78, that vicinity. So that's really it. I just want to emphasize that we've got two important retracement drawings done. I have every confidence in the world Tesla's going to run out of steam. And I say this with no position in Tesla. Honestly, I've got no personal interest in this at all. It's just a really interesting chart to me. But I do have a personal interest in how it drags the market this way and that. Because Tesla's bottom marked precisely the market's bottom as a whole. And I further think Tesla's exhaustion point may well be the same day as the market tops too, which apparently is not happening this week, but Fed Day, Wednesday, that could be it. Who knows? Anyway, that's the end of the show. Please do be cognizant of these lines. I hope it's helpful.